All right, welcome back. Today we're taking a deep dive into a global icon, a brand that's, well, stumbled a bit lately, Nike. The big question is, could this be a legendary comeback story in the making? We're going to find out, and we're going to use the playbook of one of the greatest investors of all time, Peter Lynch. I mean, for years, you couldn't go wrong with Nike, right? It was a total rock-solid investment, a true titan. But lately, its performance has been, let's just say, less than amazing. The stock has really taken a beating, and it's got a lot of investors scratching their heads about what's next for the swoosh. And that just begs the huge question for all of us as investors, is the magic gone for good? Or is this one of those rare opportunities to get in on the ground floor of a massive recovery for one of the most iconic brands on the entire planet? Okay, so first things first, let's really dig into how the market is looking at Nike right now. Because believe me, that perception has changed a lot. You know, the legendary investor Peter Lynch, he had these buckets he'd put stocks into. And for most of its life, Nike was what he called a stalwart. Just a huge, reliable company that delivered steady, predictable growth. But now, oh, things have changed. It's squarely in a totally different bucket. The riskier, but potentially way more rewarding, turnaround. So, the big question is it a good turnaround candidate? The cool thing is, we don't have to guess. We can literally use the exact playbook Peter Lynch himself laid out to find these kinds of hidden gems. And Lynch, he absolutely loved turnarounds. And why is that? It's because the market tends to just overreact, right? It punishes companies way too hard for their mistakes. And that creates this incredible opening, a situation where the potential upside is just massive if the company can simply get its act together. So he came up with this 5-point checklist, super simple but incredibly powerful. And that's what we're going to do right now. We're going to run Nike through this very test one step at a time. Okay, here we go. Let's put Nike through the ringer, starting with what is, without a doubt, the most important question of all when a company's in trouble. I mean, think about it. A company can't possibly turn itself around if it goes belly up first, right? It's just that simple. Before we even think about strategy or new shoes, we have to look at the money. Is there enough cash to weather the storm? And wow, the answer here is, well, it's a big one. Nike is sitting on an absolute mountain of cash. We're talking over $8 billion. To put that in perspective, that's more than enough to cover its entire long-term debt, which also happens to be right around $8 billion. So what does that tell us? Here's the bottom line. Nike is in absolutely zero danger of going out of business. This isn't some desperate company scraping by. It's a financial fortress with all the resources it needs to fund a major comeback. So first test, a huge pass. Okay, so what was the problem then? Well, it wasn't something that was going to kill the company. It was a big, fat strategic mistake. They went way too hard on selling directly to us, the consumers, and in the process, they ticked off their big retail partners like Foot Locker. This left the door wide open for competitors like Hoka and On Running to swoop in. But the good news? They're basically hitting a giant undo button, bringing back a veteran CEO, fixing those retail relationships, and slashing $2 billion in costs. And this right here, this shows that the undo button is working. Look, for a company like Nike, when your pile of unsold shoes grows faster than your sales, that's a gigantic red flag. It means discounts, and discounts crush your profits. But look at this. They've finally got it under control. Inventory is actually down now year over year. That's a key sign the ship is turning. All right, now we get to the really juicy part. This is what Peter Lynch called the ultimate confirmation. You could even call it the smoking gun signal that a turnaround is for real. I love this quote from him. It just nails it. Insiders, the execs, they might sell their stock for a million reasons. A new house, taxes, whatever. But they only buy it with their own hard-earned cash for one reason and one reason only. They are convinced the price is going up. It's the strongest vote of confidence you can get. And folks, here is the proof in the pudding. Just look at who is buying Nike stock right now. We're not talking about small-time stuff. We're talking about Nike's own president and CEO, Elliott Hill, dropping about $1 million. And, get this, Tim Cook, the CEO of Apple, who's on Nike's board, also just invested over $1 million of his own dollars. And here's the kicker. Look at the price they're getting in at. Both of them are putting millions of their own money on the line, right around that $42 mark. When the people who know the absolute most about a company are buying hand over fist at a certain price, well, that sends a massive signal to the rest of us. It creates a very strong psychological floor. So look, Nike is checking all the boxes for a classic turnaround play. But that doesn't mean you should just go out and mash the buy button on the stock. Let's talk about a more strategic way to play this, one that might fit certain portfolios better. Now, for my own personal strategy, Nike doesn't quite fit the AI Fortress criteria I look for, so I'm not going to buy the shares directly. But there's another way in, an approach that actually pays you to participate while letting you define your risk right from the start. Okay, that strategy involves selling what's called a cash-secured put. Now, I know that might sound complicated, but stick with me. It's actually pretty simple. Think of it like this. You get paid cash today in exchange for promising to buy Nike shares later, but only if they drop to a price you choose. So in this example, you could agree to buy Nike at $40 a share, and just for making that promise, you collect around $450 in your account right away. So why would you do this? Well, the beauty here is threefold. First, you've got a massive margin of safety. Your break-even price ends up being $35.50, way below the $42 where the CEO and Tim Cook are buying. Second, you can earn a really solid, what comes out to be about a 12% annualized return on your cash while you wait. And third, you literally get paid to see if the turnaround plays out. So let's bring it all home. We've run it through the Peter Lynch checklist, we've looked at what the insiders are doing, we've even explored a specific trade. What's the final takeaway here? What does this all mean? Well, it really seems like Nike is a textbook Peter Lynch turnaround. You've got a financially rock-solid company that's fixing a big but fixable mistake. And that heavy insider buying from guys like Tim Cook, that's about as strong a signal as you can get. It gives you a really compelling starting point to figure out how you want to approach it, whether that's buying shares or a more strategic route. Hey, thanks so much for watching. If you got some value out of this breakdown, do me a favor and hit that like button. It really, really helps get this information out to more people. Thanks again, and I'll see you in the next one.